Welcome to ForexTV.com's PM Exchange. It's Friday, January 11th. I'm Remy Hoki. Today we're joined by Ashraf Laidi, Chief Forex Analyst at CMC Markets. Good afternoon, Ashraf.
Good afternoon, Remy.
Happy Friday.
Happy Friday to you too.
Well, as we're ending the week, we had the unchanged rate decisions from the BOE, ECB, and there's talk of a rate cut by the Fed Reserve by as much as 50 basis points. And there's also been rumors about an intermediate cut. But as a result, we're seeing yen gain as equities head south. So in this current environment, which currency plays do you see having the most opportunity?
The yen does well. You know, it would do well. You know, this is a situation. I mean, surprise, surprise. The stock market is falling. People have to. They're very desperate. They have to get the stock market up. So they say, oh, there is an intermediate rate cut. There is talk of an intermediate rate cut. We've seen this time and time and time again, Remy. I'll tell you something. One sign for you to know that the stock market, that the sentiment is so bad. We told our clients. On our Friday morning note today, we told them that even though the stock market in the US went up by around 200 points, more than 1.5% in the Dow, in the S&P, even though the stock market went up on Thursday that much, guess what? Asia and Europe did not buy that rally. Asia and Europe went down. Why? Why? Because the rally that we saw on Thursday was because of Ben Bernanke saying the situation is so bad that I'm ready to do anything for you guys, you know, right? And then we had Bank of America buying, saying, which is now confirmed, they're going to buy $2 billion or $4 billion in countrywide, and people said that's very good news. Is that very good news? This is the mortgage banker that has so many losses, and it's being about to be bought by the biggest retail bank in the United States of America. Do you know how much losses Bank of America is going to inherit? And do you know how much a credit strain and, more importantly, legal woes? So to answer your question, Remy, even though the stock market went up in the US, Thursday the stock market went down in all of these countries, and then today we are down again, what, 270 points. That is good news for the yen. The yen is a good buying opportunity against the Canadian, against the US dollar, but more importantly, Remy, against the sterling. We went all the way down below 213.
And indeed, Ashraf, it is troubling to see that there will be more write-downs from the financial giants due to credit market losses. But if we could shift our focus back to rate differentials, and given what we heard from Trichet yesterday, we saw euro strength, but euro dollar right now is below 148. So given that we'll be getting a slew of U.S. economic data starting on Monday with and going throughout the week with inflation, industrial production, retail sales, as well as tick data, where do you see euro-dollar trading in the coming week?
This is a very long question. And when you look at the very hawkish press conference that Trichet made, which was a reason why, a part of the reason why the euro went above 147 to 147.50, and then when Bernanke spoke, the euro went to 148. I am really conflicted here between what the chart is telling me in the euro and between what the hawkish delivery by the ECB is telling me, which should be positive for the euro. The chart, Remy, tells me that the euro, like I think you will have the levels for the euro, I think the euro has to come down towards 147.30 all the way to 147, and I think it's going to be testing 146.80. The ZEW survey, the sentiment, the investment survey next week is going to be quite negative. The CPI in the US could be big. It could be positive for the US dollar, right? Industrial production could be bad, and retail sales in the US could be bad, and could for the US dollar to be good for the euro. However, if, Remy, we're going to see more declines in the stock market, that is not necessarily going to be a good thing for risk appetite, and it's not a good thing for the euro. Big resistance at 148.30.
Okay, Ashraf, speaking of the euro hit another record high against the sterling, which we've seen in the past few sessions. And the sterling did hit a 10-month low against the US dollar. But I know that on December 7th, when we had you on the show, you mentioned Aussie dollar against sterling as your favorite trade for this year. So in the medium term, what's your target for that pair?
Yeah, December 27th.
Yes.
We mentioned that. Don't give me that much credit. Yeah, I wasn't able to foretell it that long ago. December 27th was Aussie sterling was a 44.50. Now it's 45.50. It's 100 pips. You know, I was telling you all along of the past 3 or 4 months, sterling is going to be such a bad currency in 2008. Now we got the Financial Times writing a story saying why the sterling will be the dollar of 2008. I've been telling my clients exactly those words. Okay, here is the thing. To answer your question, I think sterling, we may see 47. This is not sterling Aussie, but Aussie sterling. I know I approach it in a different way, but if you trade with us, with CMC, you can actually approach it in this way because it is cheaper for you. It requires less margin if you go in at Aussie sterling because the rate is like 0.4555 rather than 219 and something, right? So we are looking at 47. Sterling, Remy, the fact that cable had a hard time going above 196.30. That is very bad, despite all the bad news in the US data, okay? So 196.30, 196.40 is a big resistance, and you got to target interim support at 195.50 and 194.80, and we could go all the way to 194.50. There are some inflation numbers next week, I believe Tuesday or Wednesday, from the UK. And I don't know how much they're going to matter really, but because the data today was so bad in the manufacturing production and industrial production from the UK today, it was a signal that told the BOE, you know guys, you should have cut rates. So to answer your question, I am negative sterling as usual. Against what? I would say still against the yen. But you have to, but don't sell it at the lows because it's a very volatile currency. So I would be more of a seller at around 215 to 214.80, and also negative in sterling against the New Zealand dollar. I have a feeling though that the Aussie may not have a very good week next week. It's going to struggle a little bit in the first 2 days, Sunday, Monday, Tuesday. Maybe it's going to go back up until Wednesday or Thursday.
Okay, and Ashraf, before we move away from the Australian dollar, if you could give us your forecast for the currency against the US dollar as well as the CAD.
Yes, the Aussie dollar, we do think that the Aussie is going to, I think it's breaking right now below 89. It is going all the way to, I would say, 88.60. I would say it would go all the way to 88 probably 50 or even 88.30, and but I do think that it's going to probably rebound later on, and it's going to later on in the week, and I think the following week is going to be very important. CPI numbers, they're going to push it above 89. However, I think Aussie CAD, I think if you look at it, I do expect it to come back just a little bit. I think you have a chart there. I think it's going to come back all the way to 0.9005, okay, and then go back up above 0.9 and go all the way to 0.913.
Okay, Ashraf, that's all the time we have today, so thank you very much for your insight and analysis.
Thank you. Pleasure.
This has been your Forex News with Ashraf Laidi from CMC Markets. Next up, we have your equities and commodities wrap-up for the day. U.S. stocks tumbled into the final trading hour of the day. The major indexes fell sharply as credit worries over investment bank write-downs loomed on Wall Street. Today's plunge in equities also reflected anxiety over lowered earnings forecasts and slowing consumer spending. In U.S. data, the Commerce Department reported that the U.S. trade deficit surged to its highest level in 14 months. November's deficit widened by 9.3% to $63.1 billion. Meanwhile, export prices rose 0.4% in December, with the year-on-year rate at 6%. December import prices were flat, with the figure ex-petroleum up 0.3%, with the figure up 10.9% over last year. At the closing bell, the Dow Jones Industrial Average slid 246.79, ending the session at 12,606.30. The Dow is ending the week with a loss of 1.5%. The tech-heavy Nasdaq lost over 48.5 points to close at 2,439.94, and the S&P 500 lost 19.31, ending down at 1,401.02. In the fixed income market, Treasury bonds rallied on the day as U.S. equities continued their decline. The benchmark 10-year Treasury note rose with its yield at 3.81%, down from 3.88% late yesterday. The 30-year bond gained with its yield at 4.39%, down from 4.45% late in Thursday's session. And the 2-year note rose with its yield at 2.59% from 2.68% in the previous session. And in energy, crude oil prices fell lower today. Given increased recession concerns, there are expectations for lowered crude oil demand. February light sweet crude fell $1.02 to settle at $92.69 a barrel on the New York Mercantile Exchange. Crude prices ended the week with a loss of $5.22 a barrel. After trading at a high of $100.09 last week, prices are now lower by 7.4%. Taking a look at petroleum products, February heating oil fell 2.14 cents, ending at $2.53.59 a gallon. February gasoline fell 3.98 cents to settle at $2.3203 a gallon. Meanwhile, February nat gas futures fell 4.9 cents, ending the session at $8.21 per million BTU. Over in the metals complex, COMEX gold futures hit another record above $900 an ounce and ended up for the fourth straight session. With expectations of more Fed rate cuts to come, the precious metal is seeing increased safe haven demand. February gold hit a record and session high, up by $6.50 to $900.10 an ounce. The contract ended up by 0.5% or $4.10 at $897.70 an ounce on the NYMEX. For the week, gold futures gained $32 an ounce. Meanwhile, other metals also gained on the day, with March silver up 9.5 cents at $16.37 an ounce. January platinum rose $9.90 to close at $1,568.20. March copper also ended up by $2.25 cents at $3.34 a pound. This afternoon, we're joined by Bobby Firestone, analyst at Aileron Trading. He'll give us this week's recap in energy and metals futures.
Well, gold bugs everywhere should be looking for that leftover bottle of champagne from New Year's and popping the top on it tonight. Finally, in actual real pit trading during a U.S. session, gold hit $900 an ounce. The high on the electronic February contract from Chicago, $900.40 an ounce. Now, heading forward, okay, this 900 is a big number, first time ever, so psychologically it is significant. But I wouldn't be the least bit surprised because of just the severity of this number, that there being a lot of people coming in and saying, okay, at 900 I want to sell, so at least a minor pullback is in order. I really, if you look at a chart, and it's run $100 in 3 weeks, so it is due for a pullback on at least some level. Now, not all tangible resource players are quite as happy today. Crude oil, on the other hand, sliding down lower today. It's crude. We broke through yesterday's low, so we really took out support. February crude bottomed out 92.31 today. Now, we come a little bit off the low for the settlement, but still it's definitely looking weak. Now, I think this is going to continue for at least the near term, as people realize that it's not all sunshine and lollipops out there, that even if the Fed were to act today, the economic picture is still on the dark side. So look to see crude oil continue to pull back for at least the near term, probably trying to probe out support at either 90 or maybe try and test the support from early December in the upper 80, 87 range.
That was Bobby Firestone, analyst at Aileron Trading, with his commodities commentary. And that's it for today's edition of PM Exchange. I'm Remy Hokie. Join us Monday morning for your latest news update right here on ForexTV.com. Have a great weekend.